If you are an Indian trader, this is probably the one market update you cannot afford to miss before the opening bell. Because on this channel, we track the global moves, the hidden market signals, and the sentiment shifts that can quietly change the direction of Nifty and Bank Nifty before most traders even react. And right now, the global setup is becoming extremely interesting. Overnight, tension near the Strait of Hormuz is back in focus after fresh clashes between the US and Iran. And this matters much more to Indian markets than many traders realize. Because the Strait of Hormuz is one of the world's most critical oil and LNG routes, any disruption there immediately raises fear around energy supply, inflation, shipping costs, and global risk sentiment. Now, here's the twist. Qatar has reportedly sent its first LNG shipment through Hormuz since the war began. That tells the market one thing very clearly. Global energy supply is still moving. So traders are caught between two narratives right now. One side fears escalation, the other side believes the worst case scenario may still be avoided. And because of that confusion, volatility may stay elevated. Brent crude is again hovering near the $100 mark. For India, that is a very sensitive zone. Higher crude prices can pressure the rupee, increase inflation concerns, and weigh on sectors like aviation, paints, chemicals, and OMCs. At the same time, energy and upstream themes could continue attracting momentum buying. So, when the market opens, keep a close eye on how Nifty reacts near key resistance zones. Because if crude continues rising while global tensions expand, Bank Nifty may struggle to hold aggressive intraday rallies. But this is where things become even more important for traders. Despite all the geopolitical tension, US futures are still holding firm. Why? Because global investors are still chasing the AI and technology rally. That's the reason why markets are not collapsing even with war headlines everywhere. And this tells us something very important about current market psychology. Right now, liquidity and AI optimism are still overpowering fear. That is why traders should not blindly become bearish only based on geopolitical headlines. Watch price action, watch institutional flow, watch whether FIIs continue buying dips. Because in this kind of market, sentiment can flip very fast. And speaking of AI, India's own AI related themes are suddenly catching fire. Adani linked power and infrastructure stocks are seeing strong momentum because investors are now connecting power demand, data centers, and AI infrastructure together. Adani Green, Adani Power, and Adani Energy have all seen aggressive moves recently. This AI infrastructure narrative is becoming a serious sector rotation theme in the Indian market. So, watch for continued momentum in power, capital goods, utilities, and infrastructure stocks. But there's another side to this story. Globally, there are growing concerns that India may actually be lagging the global AI race. Investors globally are focusing on semiconductor manufacturing, compute power, and advanced AI infrastructure. That could explain why Indian IT stocks are not seeing the same explosive re-rating as some global tech names. And traders need to understand this carefully. This does not automatically mean IT becomes bearish. But it does mean stock selection inside the sector becomes extremely important. Strong management commentary and AI related guidance during earnings season could create sharp stock specific moves. And today's session may become heavily stock driven because earnings remain a major trigger. Heavyweights like SBI, Tata Consumer, and Hyundai Motor India are on traders' radar. Especially Bank Nifty traders should closely monitor SBI results and commentary because PSU banks have been a major momentum pocket recently. Now another interesting signal coming from the market. Indian small caps are again outperforming globally. The Nifty small cap index has rallied sharply from April lows and is approaching record territory once again. This tells us retail participation and domestic liquidity remain very strong despite global uncertainty. But traders should be careful here. When small caps rally too aggressively during uncertain macro conditions, volatility can suddenly expand. So, position sizing becomes extremely important. Do not over leverage into euphoric momentum trades. Watch whether small caps sustain strength during the first hour after opening. because if broader market participation remains strong, Nifty dips may continue getting bought aggressively. Another important development traders should not ignore. Trump's global tariff plan has reportedly been declared unlawful by a US federal trade court. That has slightly improved global risk appetite because traders are seeing reduced chances of aggressive tariff escalation in the near term. Meanwhile, the dollar index and bond yields remain critical variables. India's 10-year bond yield is slowly inching higher, and RBI liquidity support appears less aggressive now. That could slowly impact rate-sensitive sectors if yields continue climbing. So watch Bank Nifty carefully around resistance zones because financials may become highly reactive to bond market movement. And here's the bigger picture traders need to understand before today's opening. The market right now is balancing three forces at the same time: geopolitical fear, AI-driven optimism, and strong domestic liquidity. That combination usually creates sharp intraday swings, false breakouts, and sudden reversals. So don't chase candles emotionally. Let the trend confirm first. Watch support and resistance carefully. Watch the opening range. And most importantly, watch whether FIIs continue supporting the rally. Because if foreign flows remain positive despite global tension, the market may continue surprising bears again. For Nifty, traders should closely monitor whether the index sustains above recent breakout zones. And for Bank Nifty, the first hour could set the tone for the entire session, especially with banking earnings and rising bond yield discussions in the background. This is not the kind of market where traders can become careless. One headline can trigger a gap up, another can trigger instant profit booking. And that's exactly why staying updated matters. Because in today's market, missing one major overnight development can mean missing the entire momentum setup for the next trading session. So stay alert, trade with risk management, keep emotions under control, and stay connected for the next big market moving update before everyone else catches it.